Good morning, everybody. We have a higher trade in the grain markets here early on Friday morning. It is 6:30 a.m. Central Time. December corn futures up 1 at 410 and a quarter. January soybeans up 1.5 at 1105 and a quarter. December Chicago wheat up 2 3/4 at 612. December Kansas City wheat up 3 3/4 at 566 and 3/4. December spring wheat up 2 3/4 at 563 and 3/4. Corn and soybean export sales remain very strong. USDA confirmed another week of strong sales yesterday for both crops. Soybean sales for the marketing year, 48.5 million metric tons, exceed the previous record, which I believe was 2016, by a whopping 34%. So we are into some new territory here in regard to soybean sales. Corn sales for the marketing year, 33.2 million metric tons. That exceeds anything we've seen in the last 20 years. You got to go back to 1995 or 1996 to see anything close to that. I think your more modern era number was 2007, and I think we're about 13% above that. So the sales pace remains very strong. One thing that is noteworthy, China bought only 811,000 metric tons of beans last week. That was an 11-week low. We haven't seen China in the U.S. corn market as actively recently, but still sales are very, very strong. Now, maybe on that same note, USDA's office in China made a drastic increase to its forecast for Chinese corn imports. They put the number up to 22 million metric tons. It had been at 7 million metric tons previously. If you watched my podcast from a couple weeks ago about China with Ken Morrison, we talked about this quota situation. We talked about these numbers, and what USDA did here was something that the trade thought should have been done probably a couple of months ago. So I don't think that this is any fresh news. It's just kind of USDA confirming what we already knew. You know, China's the number that's on the USDA reports right now is 7 million metric tons. China's already bought 10.5 million from the U.S. They've already bought 5 million from other destinations. So frankly, this is kind of old news, but it's USDA kind of confirming something that I suppose maybe we already knew. Key soybean growing areas in Brazil will remain dry for at least until early next week. The dryness in Brazil has certainly garnered attention as the soybean market rallies. A lot of your key soybean growing areas in Brazil have been dealing with abnormally dry conditions, and they'll see some rain next week the way that it looks. Some forecasters still believe that kind of a drier pattern could remain in place, talk of La Nina, that sort of thing. I don't know if that's what happens or not. I will say that come Sunday night into Monday morning, traders will be very interested to see if these forecasts for rain next week verify. Fund traders remain very heavily long the grain complex. Funds were estimated to be net buyers of 8,000 contracts of corn, 15,000 contracts of soybeans, and 3,000 contracts of SRW wheat yesterday. Private groups estimate that funds were net long 237,000 contracts of corn, 228,000 contracts of soybeans, and 40,000 contracts of SRW wheat at yesterday's close. So across the grain complex, the funds are holding what I would call an extreme long position relative to what we've seen historically. The U.S. dollar trades lower again this morning. This is a positive input for a lot of U.S. commodity markets. The dollar's on pace to lose almost 2% this week, given a lower trade this morning. The dollar softened up on Tuesday or following Tuesday's election. There's ideas of additional stimulus or quantitative easing, whatever you want to call it. I think that there had been some traders that kind of fled to the dollar as a safe haven ahead of the election, and now are kind of exiting that length. Corn market, we had a higher close yesterday, but it wasn't necessarily the best close. December futures, the nearby contract, closed about 8 cents off of the day's high print, but you've still got a bull trend intact here. Things look good. I think the market has, to some extent, already discounted a friendly report from USDA next week. I'm not sure how aggressive USDA is going to be with the production cut. I mean, nobody knows. The trade's expecting corn yield to come down, but it doesn't have to. USDA doesn't have to make that move. The demand situation is also interesting. USDA may be forced to increase the export forecast, but they may have to reduce the ethanol forecast for demand. So there's a lot of moving pieces here, but I think the trade has already, to some extent, discounted what is likely to be at least slightly friendly report. Soybean market just has a lot going for it here. Dryness in Brazil, strong exports, weaker dollar, expectation for a friendly report. A lot of the same things that are driving the corn market. This Brazil situation, again, really bears watching here. We've got to see if these forecasts verify over the weekend for rain next week, and that could be potentially a big deal come Sunday night or Monday. Wheat market acting very well. Your nearby December Kansas City wheat contract posted a fresh high for the move yesterday prior to some late selling. So kind of like in the corn, the wheat was very strong early and then sold off late. The weather models here just offer really nothing in terms of relief for the driest areas of U.S. HRW wheat country, and that is a factor that should continue to support price action here. Cattle futures were mixed yesterday. We had a sharply higher trade at one point, especially in the feeder cattle, and then they turned lower. We ended up with kind of a mixed bag on the close. There was some more cash trade at 107 yesterday. The box beef market had a nice bump yesterday, up more than $2 in the choice boxes, up $1.92 in the select boxes. Ahead of the cash open, the Dow Jones is down 200 points. The S&P is down 32. This is following a phenomenal string of higher closes here we've seen over the last 2 or 3 days. The bonds are about flat. U.S. dollar is down. Crude oil is down $1.26, 37.53 in the December WTI. Precious metals a little bit higher. If you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan. If you would like to know when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year, check out that subscription service. It's $49 a month. You can cancel it at any time. There's no other obligation. It includes my morning email that goes out every day at 6:30 Central Time and a text message service. I'll let you know exactly what I'm doing. You don't need to have a futures or options account. You can be a cash-only marketer and participate here. So if you'd like to know what I'm doing every day, check that deal out. Have a wonderful weekend. I will talk to you on Monday.